Hello friends, this is Sandeep here. Till now we have discussed various analysis or aspects and ratio aspects of fundamental analysis. Today we are going to discuss another important and very much interesting ratio that is known as PEG ratio. PEG ratio is a lesser known ratio analysis while people generally talk about ratio analysis fundamental in terms of fundamental analysis. Most of the people actually do not know about PEG ratio, whereas PEG ratio is, plays a very important role while analyzing stock prices. PEG ratio, we can say PEG ratio is a lesser known cousin of P ratio itself. When most of the people talk about only P ratio, but one step ahead, we should talk about PEG ratio because it shows the actual picture of the stock prices. Now, first talk about what actually is PEG ratio is. PEG ratio determines the relationship between PE ratio and EPS. It means it determines a relationship between price of a share and its potential of earning of the share. That the how much the stock price can earn after investing in the share. So, and it also talks about the growth perspective of the share and in near future, how can the share price fluctuate, how a stock can move. PEG ratio determines this also. In mathematical terms, PEG ratio, we can describe PEG ratio as PE ratio divided by EPS. We already know what is actually P ratio is and what actually EPS is. Therefore, PEG ratio determines a relationship between P ratio and how it works in terms of EPS. This actually described in PEG ratio. When we talk about fundamental analysis, and we see the PEG ratio, it should PEG ratio should be actually one. The absolute term should be one. It can vary, or though it can varies above one or lower than one. If the PEG ratio of any stock is above one, then we can say the price of the share is overvalued. And on this stock, you can see the P ratio is already on the higher side in terms of EPS, and that's why it is above 1.00, and that's the reason it is known talked as the price is overvalued. Whereas if PEG ratio is below 1.00, it means the price of the share is still undervalued and it can be a good option to buy that particular share because the P ratio of that particular share is already on a lesser side. Therefore, the PEG ratio determined as less than 1.00. That's why it is a beneficial for the from investor point of view to invest in that particular company. Though we cannot determine to buy a stock based on a single ratio, we have to consider 5 to 6 ratios, whatever we have described till now, and after that we can go for making investment in any stock. That's on my friend from my side about the PEG ratio. Tomorrow I'll come with another important thing about financial analysis. Thank you, my friends. Thank you very much.